70% win rate, 1 hour a day, and 4 steps is all you need to become a profitable trader. And this is easily scalable after that. I'm going to show you the back-tested results I have over the last couple of months through TradeZella, as well as how you can use this strategy any time of day. And you can basically set limit orders to set it and forget it. And what's even better, with a 70% win rate, can you really argue with that? Anyways, let's get into it. Let's get into the Fibonacci divergence edge strategy here. This strategy can actually be used any time of day. I use this all the time. I am more of a morning and night trader just because I have other stuff going on with my day. So I like to get in 1 to 2 trades in the morning, 1 to 2 trades at night, and call it a day. That's basically all I do. But this strategy you can use any time of day, whether it's 3 a.m. my time or 3 p.m. my time, 8 a.m. your time, 8 a.m. my time. I just want to point that out there. It's strictly using the Fibonacci really, overall trend direction, and divergences here. So I'm going to break this down into 4 simple steps so you guys can easily see this. But step 1, you are going to first mark the previous day high and low candle here. So we will move to the charts, and I am just going to show you once again, if you are trading crypto, pick one coin to start out with trading. I purely stick with Solana. It just makes things a lot easier. Your brain is less overwhelmed instead of jumping around from coin to coin. A lot of them follow Bitcoin, right? So pick a coin to start out with, something that's popular, that has good volume. You can think of Bitcoin, Sol, Ethereum, Link, Litecoin, ADA, Atom, all those AVAX, all those type of coins that have been around for a while. But just pick a coin to start out with and pick a coin that you want to trade daily. And that's all I do is I trade Solana daily. I don't really jump from coin to coin. It really helps you to get to know the chart, first of all. So we are going to start here. And with that first step, we're just going to mark our previous day high and low candle. And this was a trade I actually took earlier this morning. So I'm just going to show you a review of this trade. The previous day high, previous day low. Then we'll get into some results here, but previous day high and low candle right there. And why are we marking this area? We are marking this area because we are scalping on the 1 minute or 5 minute time frame. And usually price will gravitate in between these areas or try to touch these areas throughout the day. So for instance, let's say we were starting at around here where there was some candles on the 1 minute going up and down. Price might tend to gravitate towards this previous day low before hitting resistance, right? Or before breaking through. Same if we were gravitating toward the previous day high. Maybe we were a little above here and our candlesticks on the 1 minute were moving here. You could assume it's probably gravitating towards the previous day high area. So this is why we mark this area. The next step here, step number 2, we are going to check for an hourly divergence. And why we are checking for this hourly divergence is I have noticed probably 70 to 80% of the time is if we see an hourly divergence, we can probably assume that we might get a reversal coming. Meaning if we were looking to take shorts and going with the trend because the trend is our friend in trading, we could probably see a reversal and aim for longs instead. Same with shorts. So if we saw a bearish divergence, we can assume we're going to take longs. If we saw a bullish divergence, we can assume we're going to take shorts. And this lines up pretty well, especially if we're meeting that previous day low point or that previous day high point. So for instance, if we have a bullish divergence near the previous day low, we can likely prepare for more long setups because we could get resistance at that previous day low. And if we're getting a bullish divergence as well, this could indicate a potential reversal. So we would no longer be looking for shorts. We would possibly be looking for a long setup here. Same in the bearish divergence. So if we're near that top level, that previous day high, and a bearish divergence is on the hourly time frame, we can probably prepare for a short setup here because this could be a potential reversal play. And like I said, nothing is 100% in trading is certain. However, I have seen this continuously over and over again whenever I do trade this strategy. So this is why it's a rule here. So if there's no divergence, we don't see a divergence at all on the hourly time frame, we can probably assume we're going to continue with the trend. So if the trend is up, meaning we're making higher highs and higher lows, we're going to continue with the bias that we should be looking for long positions. If the trend is down, the bias is short. So we're going to continue looking for short positions. So let's move to the charts here. So now that we have the previous day high and low, we'll go to step 2. We'll move to the hourly time frame. And we are going to check, and I am just going to go back to 8 a.m. Central my time since I already took this trade. But 8 a.m. Central was around right here on the hourly time frame. So right here, we don't really have any hourly divergence. It's just following that same trend downward. So we can probably assume we're going to stick with the trend here, which is down or shorts, and we're going to be looking for short entries. So we have the overall trend direction and that we should be looking for shorts today. We are also way below the previous day low. It actually retested back here around midnight my time before hitting this 8 a.m. area. So once again, another good confluence that we could probably be looking for shorts today. So step number 3 here, we're actually going to take our Fibonacci retracement. And depending which way we're going, we're just going to draw from the nearest swing high to the nearest swing low, or the nearest swing low to the nearest swing high. And we're going to keep this super simple. I get there's other confluences that can be at play here to find better entries, but keeping this super simple. Entry at 0.618. If it lines up with a bearish fair value gap, since we're looking for shorts on the 5-minute time frame, even better. And we're simply going to look to take profit at 1.272. Now, where do we put our stop loss? Stop loss is very important here. You're going to put it above your 5-minute fair value gap candle, including that wick area. Now, if that 5-minute fair value gap candle lines up pretty close to a Fibonacci level too, like a 0.382, put it a little bit above that as well, because a lot of times I'll see it come just above that before taking it back down to my take profit. So that's just another confluence to keep in mind there. So next, we're going to move down to the minute here. I took this trade around 8:30 a.m. my time. So I was looking around this area. So what you're going to do, we're on the 1-minute time frame now. You're going to take your fib retracement from this bottom, since we're looking for shorts, to this top. And we are going to look for entry at this 0.618 level. We are going to take our short position on TradingView. And we are going to mark this 0.618 level. We're going to mark our target profit. Once again, we are going to keep this simple and mark our target profit down to this 1.272 level. And our stop loss will be just above this 5-minute fair value gap candle. So as you see here, we have a bearish 5-minute fair value gap. Here's that bearish candle, and it matches up pretty well with the 0.382 here. So we're going to put it just a little bit above that so we get some wiggle room. So right there, we will go ahead and let this play forward for this trade. Keep in mind, depending on the account size you're playing with, you can simply double click this, whatever exchange you're using. I use MEXC. I do believe it has the lowest fees, but if you have an account size of $1,000, you're risking 10% of your account. That would be $100 you're risking. So if you lose the trade, you lose $100, right? If you win the trade, we have a risk reward ratio of 2.22. You would win $222 since we're risking that 100. If you are just starting out trading, I would recommend putting your risk level at 1 to 5% here just to get some practice in. But once you start getting better, you can move up to around that 10% range. Would I go higher than the 10% range? Probably not. Just to keep it safe, I always play with the 10% range. That means you can lose 10 trades before completely blowing your account. So if we lost 10 trades in a row, our $1,000 would be completely wiped out of our account. If you are losing 10 trades in a row, there's probably something else you need to be working on, whether it's the strategy, your mindset, your discipline. Could be any one number of things, but definitely you should not be losing 10 trades in a row. So we will go ahead, just play with the $1,000 account here. We're risking $100. And we will go ahead and play this forward. So I'm going to go ahead and click buy here. You're going to see we have a quantity of 169. So this is the quantity you would actually enter in on MEXC, for instance. So we can just put in our quantity down here, show for sake. And this will be a short, so it will be a sell order. So we're going to sell there. We're going to set our take profit level at this 1.272. And we're going to put our stop loss right up here. Okay. So we are all set up for this trade. I am going to show you how you would put this in MEXC. A lot of these exchanges look the same, so whatever you're using here, you can use. But for instance, you would just go to Sol here, and with MEXC, if you are in certain other countries, they only accept certain countries. Once again, it's a crypto exchange with a lot of leverage you can use. It may not be regulated in other countries, so make sure you are using a VPN. I personally use Surfshark here, so they are pretty cheap as well. I believe I bought like a 3 or 4 year package for 50 to $100 during Black Friday one time. I have no idea, but they are pretty cheap here. And you would need to switch your VPN on in order to use one of these exchanges. So I personally use Switzerland, as you can see here, but that is how you would use one of these exchanges. So let's say we are putting this into MEXC here with that $1,000 account. So we would enter in 169 and our price would be this 162.11 at that 0.618. So all you would do, set up your limit order. So 162.11, and our quantity is right here at 169. So 169, and you would simply click open short here. We have a short opened all the way up here, right? This price is currently moving, but as you can see, that's where your line would go for that short. It will also appear under open order here. I usually stick in between 50x and 70x leverage for these. You will not get liquidated with 50x with where our stop loss is at. It will hit your stop loss before you are liquidated. So our liquidation price, I believe, would be, it'll tell you a liquidation price once the open position opens, but stick with around a 50x leverage for these. That is the leverage I always use. Sometimes I'll go up to 70 or 100, just depends. You can always calculate on MEXC too your liquidation price here. So if we were playing with 150x leverage, we have that 162.11 price. Our future quantity is 169. And our liquidation price for that short would be 162.82 with 149x leverage. So if we pull up our chart again and our stop loss is at 162.71, I would say that is way too close for our stop loss to be playing with 150x leverage here. So that's why I keep it in between that 50 to 100x range, but that is how you can calculate your liquidation price out as well. Either way, it's going to hit your stop loss or not. So as long as your liquidation price isn't close to your stop loss, you want it far away. I would say even up to this category up here. You don't want it super close like right here because you will get wicks through this. So have it somewhere up here. But let's move on and let's see how this trade actually plays out. I'm going to go ahead and just cancel this order. If you ever need to cancel an order, you'll see a trash can here. You can click revoke and you'll see that order is gone and no longer present here. But if we did want to place this, once again, 169, we could do a short. We could put our take profit as well with this. So we could do 160.81. And we could put our stop loss as well for this limit order at, what is it, 162.70? So 162.70. You'll see it gives our estimated P&L with that $1,000 account at 219 bucks and our estimated loss amount at $99 there. So then you could just click open short and you'll see it appear there again. There it is down at the bottom. You'll see our take profit is down there. Our stop loss is down there, and you can let it run while you go about your day if you really wanted to. So I'll go ahead and revoke this so I don't forget about it, but that's how that would play out. We'll go ahead and play this forward, and then I'll show you another trade after this with an hourly divergence and some back-tested results. So there is our take profit level for $224. Once again, you get some slippage there. And like I said, hey, if you want to let this run further, if you think it's going to go down further, you have the patience and discipline to hold, you can certainly aim for these lower fib levels here, like the 1.618, the 2, the 2.272. A lot of times, yes, it will come down and hit this 1.618, I found out, especially if we're going in the direction of the trend. So I have back-tested data on that, and I'm pretty sure every time over the last 2 to 3 months that I've tested this strategy, probably 80% of the time it has come down and hit this 1.618, which if you were able to hold this to the 1.618, it would actually be a $339 you would have made if you held it to the 1.618 level with that risk reward, as opposed to the $220 we made here. So that's just the amount of profit you can really get out of these trades. So that is trade number one, and that is exactly how you would set it up. Now I'm going to show you a long trade with an hourly divergence I took the previous night. So we are going to go back to our actual steps here. So following the same 4 steps, okay? This isn't hard. You can do this any time of day. Step 1, mark the previous day high and low candle. Once again, we're seeing where the price is gravitating towards as it likes to gravitate back and forth in between that candle. We're going to check for an hourly divergence. Once again, this is how we prepare for that. So if we see a bullish divergence near the previous day low, we can prepare for a long setup, even if we are in a downtrend. If we see a bearish divergence near the previous day high, we could prepare for a potential short setup, even if we are in a long uptrend. If we see no divergence, then we're just going to follow the trend. If we're seeing those higher highs and higher lows, it's a long. If it's lower highs and lower lows, it's going to be a short. All right, so step 3, draw the fib out, and we're just going to aim for the take profit at those simple areas. This trade was taken at 9:12 p.m. last night. Once again, step 1, mark the previous day high and low candle. So this would be the previous day high and low candle from last night. As you can see, it's trying to break past that. So next, we are going to move to the hourly around that 8 to 9 p.m. time. This is around 9 p.m. my time, which is when I took this trade. As you can see here, we are starting to get somewhat of a triple bottom. So we do have a little bit of a divergence here, as you can see. So this is going down. This is going more horizontal, not quite down. Even with these guys here, it's more straight across than anything else. So we do have a little bit of a divergence here that we are starting to pick up on. So this is something to be aware of. Here we are at that 8:30, 9 p.m. time, central time for me. And we are now marking our fib. So we are going to take our fib retracement. We are going to look for a long here since we had a triple bottom on that RSI, indicating a potential reversal. My assumption was it was probably aiming for this previous day low white line. We have our previous day high white line here. I was thinking it was going to come back and retest this line. A lot of times it likes to come back up to this point. Also, if you see a straight pump up or down like this, a lot of times the bars will have to come back through it to pick up whoever was left behind there. Now, if I remember this trade correctly, I believe it did only come down to the 0.786 level, not exactly the 0.618. So when I was doing this play, I did take a late entry on this. I just kind of marketed it in, but I did have a position set up for this. And because we didn't have a 5-minute fair value gap, so you'll see on the 5-minute here, there's no fair value gap here because we are in a reversal. There's just none. You can always line it up with a 1-minute fair value gap. So you'll see we have this big 1-minute fair value gap in this candle right here. And we can actually line it up, our stop loss, with that 1 minute and this candle and this Fibonacci just a little bit below that. So I did end up entering late on this trade. I remember it now at around the 0.786, and I just took profit at the 1.272. Not the greatest trade, but it bounced around here for a while. We'll go ahead and place our buy order. If you miss a trade, that's okay. Sometimes we have missed entries. It happens all the time in trading, but we can also place an order here if we really wanted to. So we will just go ahead. And I'm just going to go ahead and put 254 for our quantity here. So this will be the same. We're going to go ahead and buy, take a long position, and we're going to let this play out until that 1.272. And then we will see if it hits our stop loss or if it goes all the way to our 1.618. So hits our take profit level at 1.272. Chugging along there. See if it can hit this 1.618. So this one actually did not come up and hit our 1.618 level. It just came up to the 1.272, probably with this line here. So watch your support and resistance areas. Came pretty close to that area, probably around more in this area, which makes sense with that bearish fair value gap. A lot of times you'll see your take profit levels will hit to the left another fair value gap to recover people from there. So you'll see it came up right to that level. If you want to set your take profit there. Did not hit our 1.618 on this. Also got in late on this at the 0.786. So those are the 2 trades and how you play them out. Once again, on the hourly for this one, we did see, even though we are in an overall downtrend, remember we did see that triple bottom kind of taking place here. So we had 1, 2, 3 completely oversold, while this area was completely going downward. So that would be a divergence on the hourly. So instead of looking for more shorts here, we can conclude that the trend may be ending and we can look for a potential long to take place. So over the month of May here, this is just with this strategy. Here are all the trades I took. We are at about a 67% win rate. And these are just $100 risks because I was testing this out over the last 2 or 3 months here. But this is my go-to. You can trade this pretty much any time a day here. And these are actual results that you can see and measure. Next step of this is really just bringing up my profit factor, right? So aiming for those 1.618s, being more patient with my trades. I feel like our win rate's pretty good on this overall. You'll see I even scaled up from the previous month of April on this strategy with a simple win rate of 60% and only $1,200 profit on this one strategy to now scaling up to this month with a 67% win rate and $2,800 profit on this strategy for the month. So these are the back-tested results of this actual strategy at play. And I do actually have a technical analysis course going over all these concepts to help you master these strategies, along with all these perpetual future trading strategies, including this one, the opening range breakout, the ride the trend, the reversals, how to play all those so you can trade pretty much any time of day if you really wanted to, and really mastering technical analysis. These are all the things I found to be the most helpful when I was learning trading over the last 5 to 7 years. So this is, of course, on the paid side of the group. This took a lot of time for me to build out this course and everything like that. I do live trade daily, morning and night, typically, unless I have other things going on like family priorities. I post all my trade ideas based on a lot of these strategies here. So you can see take profit levels, entries and exits and things like that. Once again, live trading daily for whatever you guys want to see. But perpetual futures is my game, make a pretty good, decent income off of it, and looking to really scale it further this year. So if you guys do have questions, please let me know and let me know what you would like to see next on these videos. Thank you.